Money does not grow by savings. As a matter of fact, when you save money, inflation continues to make that money to lose value year in, year out. So, and money does not have an inherent tendency to grow by itself. The only way money grows is by investment. That's why in this video, I'm going to be sharing with you 7 important investment lessons that you need to equip yourself with in your journey to investing your money. Without further ado, let's jump right into the video. Hello everyone, if this is the first time you're coming across this YouTube channel, allow me to reintroduce myself. My name is Victor Isibo, the face and the voice behind Victor Isibo Reviews. Here on this channel, we talk spirituality, we talk business reviews, we talk morals, career, relationships, pretty much everything that makes you a better version of yourself. If daily personal growth and edification is something that interests you, I invite you to subscribe to this channel, turn on the bell notification icon, and put it on all so that you don't miss any of my subsequent videos. And to my returning subscribers and viewers, salute. It's a pleasure having you back on this channel. So today we're going to be talking about investment. It's not enough to save money. You put your money to better use by investing it. That is how your money grows. Now, investment lesson number 1. Risk and reward go hand in hand. Risk and reward, they are twins. They are like Siamese twins. You cannot separate them. They are of the same height. They are of the same stature. They are the same in all ramifications. So if all you're looking to do is to get high rewards, know that that business is also high risk. Okay, now this is why a lot of people fall victim of Ponzi schemes. They think only about the rewards in Ponzi schemes. They forget that if the reward is 90%, that means there is 90% risk involved as well. I think when we are focusing on the rewards, let us remember that there are inherent risk in that business as well. So people look at real estate, they are like, oh, it is low in rewards. But they forget the fact that it is low risk as well. You can sleep with your eyes closed, both eyes, when you're investing in real estate, as against when you are dealing with the volatile markets of Forex and crypto. Now, we have heard that a lot of people have become millionaires overnight in Forex and in crypto. That's what they tell you. But they forget to tell you that rich people have become paupers overnight also in the Forex and crypto markets. Okay, so when you have the understanding that you cannot separate risk from reward, then you will have better planning. Okay, we have high risk, we have medium risk, we have low risk. Decide what is your own risk appetite and operate in that risk niche. Then you would be making the right investment decision. Investment lesson number 2, diversification is key. Need I emphasize this? I mean, you don't put all your eggs in one basket, okay? You don't put all your investment, for instance, in real estate, or you don't put all your investment, for instance, in oil and gas alone. You need to spread your investment across plenty niches. Have diversified portfolio of investments, okay, so that if the oil and gas industry is not doing well, the price of Brent crude is plummeting, you're not going to be having palpitations because you remember that you have investment in real estate. Now if real estate is not doing well, you're rest assured that you have some cryptos, and if cryptos are not doing well like they were recently, you should be rest assured because you have investment in pharmaceuticals. Okay, so you are more secure when you have investment in diversified portfolios. Investment lesson number 3. You need to seek the advice of professionals in the niche you're going into. Now, you may have been successful in another niche, maybe real estate. Don't go into, for instance, crypto because you feel that you're experienced in real estate. They don't have any similarities. You need to learn from the experienced guys, the experts, about the rudiments. They are going to tell you the do's and don'ts. Then you can now test the depth of the water with one foot first of all, because you don't test the depth of the water with both feet. Okay, you need to learn. You have to go through a period of mentorship before you now finally acquire the adequate knowledge, the required knowledge and expertise to invest in that particular industry. Do not invest in an industry you know next to nothing about. It is risky. So seek the knowledge of the experts. Investment lesson number 4. Have a margin for safety when you want to buy something. Let's assume you want to buy a house now, and they said the asking price of the house is 30 million. It wouldn't be smart of you to just bring out the 30 million and pay, because apparently the seller of the house must have added some money on top of the original amount of money he had in mind to sell the house. So you are expected to bargain. Okay, so you should have a margin for safety. If they say a house, for instance, a property is 30 million, tell them you're going to pay 25, 26 or 27. If, for instance, they sell it for 27, then your margin for safety is that 3 million. Okay, the difference between the asking price and the amount you eventually paid for that property, that is your margin for safety. And that is a smart investment move, because you don't just pay the asking price. You should bargain a little and see if you can get some money off of the original price that you were told. Investment lesson number 5. Have a risk management system. Now, whenever you're going into any business, do not be fixated on the rewards only. I know the rewards is the thing that lured you into the business, that enticed you into the business, but you need to also identify the risk associated with that business so that you can come up with a way to mitigate against such risks. When you mitigate against the risk inherent in a business or investment, you have succeeded in creating a risk management system for yourself. Look at forex trading, for instance. Embedded in forex trading are risk management tools that expert traders use when they are trading. Stop loss, take profit. These are tools that helps in capital protection. So whatever niche you're going into, after the person introducing you to the business has told you all the rewards and all the things you can acquire, tell them to tell you about the risk involved, not to discourage you, but so that you people can sit down together and work out a way to mitigate against such risk. Investment lesson number 6. Take charge of your financial future. Do not allow your 9-to-5 job give you a false sense of security. The moment your boss stops deriving the kind of value he expects of you, he's going to fire you the same way he hired you. So have a backup plan, have a side hustle, have a side business. When you close from work, attend to that side business, build it up from tutelage till it metamorphoses into something big enough to replace your 9-to-5 job. Now you're a successful entrepreneur and your business is doing well. Do well to diversify your business, because you don't know what may happen tomorrow to the niche where your business is operating, so that you have a backup plan and you don't go hungry by the time the unforeseen occurrences eventually happens. So take charge of your future. Have a retirement plan so that in case of health challenges, in case of old age, in case of permanent disabilities, you will have something to feed you when that time comes. Investment lesson number 7. The goal of investment is to become rich, not to appear or look rich. So when you're having this return on investment coming in, there's this tendency for you to want to get carried away and you start spending money on frivolities and liabilities. All these frivolities and liabilities will end up depleting your entire investment capital and you will be left with nothing. So once you're making return on investment and you do not have any urgent need to spend that money, why don't you start compounding? Now when you put in capital and your capital comes back with the return or profit on top of it, put everything back in there. You're compounding, Albert Einstein says that compounding is one of the greatest wonders of the world, because if you keep compounding, what you are doing is you are invariably increasing both your capital and your return on investment at the same time. Compounding is magical. Compounding can turn hundreds of thousands into several millions in a few years if you're consistent, you're persistent, and you continue to compound. You will be amazed at the astronomical increase in your capital that you will experience. I hope you learned something from this video. If you did, give this video a like, share this video amongst people in your social circle. Subscribe to this channel if you haven't done so at this point. Till I see you in the next one, I remain Victor Isibo. Bye for now.